It's Lunch Money with Barry Armstrong here on Boston's talk station AM 680 WRKO.
Well, the stock market's down about 160 points the Dow, but right now we've got gold prices down about $14 an ounce. That's where we stand. We're joined by Tom O'Brien, who's the editor of the Gold Report. Do we have him on ISDN? We do. Great. Tom O'Brien is a frequent contributor to CNBC. He knows a lot more about gold than I do. Tommy, welcome to the show. How you doing?
Great, Barry. Great to be with you today.
Hey, Tom, help us out with the decline. We've seen 2 days in a row of declining gold prices, Tuesday and Wednesday. What led to those price declines?
Well, what you had is this. I mean, this is a classic acceleration up to the top. You had a lot of people in gold that figured that, okay, gold could never go down. And, you know, you've been in this business for a long time. I've been in the business a long time. That never ends in a nice way. Yep. And when I say end, I don't think the gold market's over, but it's going to have to build a base for a good year. Because what you had is that you had accelerations going up every day. You know, you had folks buying gold at 1900 that says, hey, you know, it's safe. Yep. Well, there's no such thing as safe in the investment business. We know that, right. Okay?
Yep. And so it was a bubble. Is that what you're telling me? Gold was in a bubble?
It was parabolic. Yes, it was absolutely parabolic. And, you know, I'm in that business, and I'd never like to see anything go parabolic, because when you go parabolic, the corrections are vicious, yep, and it's problematic. And, you know, that's what we had happen here.
All right. Now, last night, after the market closed, the CME, maybe explain to our listeners, if you would, Tom, who the CME is and what they did to margin requirements on gold after hours.
Absolutely. So when you trade a gold contract, folks, which I trade every day, you putting up a margin. And the margin last night was 7,400. Today, it's 9,500. The maintenance, meaning that to hold the position, was 5,500. Now it's 7,000. Now you're holding a huge amount of gold for, you know, $9,000 even today. 9,000 still holding 175,000. So what you had yesterday, and this is why the CME has to go up on these contracts, we had a $9,400 move yesterday, Barry.
Yep.
So if you only have 7,000 up and it's a $9,400 move, the broker dealers can explode.
Yep.
That's why it has to go up, and it went up. Now that puts pressure on the market. You know, today, you know, we got down to 1705. We're trading at 1757 right now. That's a normal bounce and a down move. You know, you can expect more pressure. And what you have, too, Barry, is, you know, the ETF structures, okay?
Yep.
That GLD is in a position that they have to sell gold when it's going down. They sold 853 ounces yesterday. They sold 750 the day before. So, you know, if people want to buy gold, I'd tell them, hey, hold off until maybe 1550, and let things settle out, because there's not money to be made in the actual physical right now. Now, the equities are going to get interesting, because the equities were lagging anyway, but the equities are going to get interesting in the next 2 or 3 months.
Let's talk about that price target, because we blew through 1750. My understanding is that there's a lot of price resistance at 1750, and then I see that there's resistance at 1500 and again at 1300 an ounce.
Yes.
Talk to us about that resistance. Like, what does it mean? And I'm trying to explain this to the layman investor, Tom.
Listen, it's a beautiful thing. Right in Boston, you know, we have all, and in New England, we have all those 3-family houses.
Yep.
The way to look at it, folks, is this. When markets go up or down, they build floors. And so picture it. Picture it, we're in a 3-family, we're on the top floor, right?
Yep.
The second floor is right what you said, is sitting there at that 1550 to 1570. When you walk down the stairs, think about this, folks. When you're walking down the stairs from the 3rd floor to the 2nd floor, how many times do you stop in the middle of the stairway and turn around and go back up? You don't. You go to the next landing.
Yep.
That next landing, and there is some good support there, because we traded there from May all the way over to July, and there was a lot of trading at that area, Barry.
Okay. Now, who's getting hurt now? Because I read that Paulson got out of gold, Soros got out of gold. These are the big boys. They had major positions in gold. Who's getting hurt? Who are the people that bought at 1850 an ounce and 1900 an ounce?
Well, I suspect, you know, what was interesting is this, is that when you actually pull this up, now this is pretty bizarre, but the way that these pension funds have come on is that, when you hear this, this is crazy. The last buys, according to the SEC, right?
Yep.
You had Lockheed Martin, okay, big buy, 1.8 million shares.
Yep.
You had Citigroup, okay, buying 2.4 million.
That was the same day they put a price target of $2,000 an ounce.
You got it. You know well enough. I mean, so it is kind of intriguing that there's pension funds that are in there, and they're buying the Kool-Aid, and it's a shame. But, we saw it in the real estate market. They bought the Kool-Aid in the real estate market. You just brought something up that is important. Greenspan, at the highs of the real estate market, of course, was saying, hey, go get option arms and, don't worry about real estate.
Yep.
Monday morning, Barry, this was unbelievable. He was out saying 1900 gold is not a bubble, and then he was saying it's a currency, but no, it gets more bizarre. What people don't understand is that he works for Paulson now.
Yeah.
He works for the guy that owned the most amount of GLD. So it's sad, Yeah. I mean, it really is. That, little hypocritical here, for sure.
Well, it's almost like insider trading, isn't it? I mean, what's the difference between that?
It's definitely insider pumping. It's Greenspan out there
pimping
the gold market.
Yeah.
I mean, it's sick. I saw that quote coming across on Bloomberg, and I says, you know what? This is amazing that people are going to, think about something. When Greenspan was the Fed chairman, right?
Yep.
They opened up new classes at Harvard to figure out what he was saying.
When you look at gold now, where's that money going? Right? When Paulson sold his gold, is he buying stocks? Is he buying Swiss franc? Like what's he doing with the dough?
I think this thing was so fast. I think a lot of that money was actually lost. Unfortunately, it just disappears. I mean, that's the reality. Soros is totally out.
Yeah.
Now, Paulson, as far as I know, still has quite a bit of gold.
Okay.
But, if you look at his numbers, his big fund is down 36%.
Yeah.
So and this is great you're bringing it up, because when liquidity comes in, well, you have to sell what's good, what's making you money, right? And sure enough, so I suspect that that's going to be selling, because something has to get pumped up inside that fund to, basically get those returns even.
All right. So right now, when you're looking at it, you think the buying point for gold is $1,550 an ounce, and where is it right now, Tom?
Yeah, we're at 1756.
1756.
Let it settle down. Let it go out 2, 3, 4 months. And what you want to hear is that you want to hear people saying that the gold market's over. That's what if I say to your listeners, you want to hear that.
Yeah.
You want it at 1550, because then your risk goes down dramatically, your reward goes up, the euphoria is off it, and that's what you need. You need the euphoria off it before you step back in.
How does an individual investor buy it, Tom? Like, I'd be afraid to buy coins because I wouldn't know what I was buying. Like, if somebody put a gold coin in front of me, I wouldn't know the difference between gold and brass.
Well, what ends up happening is this: if you're dealing with the Eagles, the gold Eagles, that works well. There's no doubt about it, because the feds will be all over you. Do you know what I'm saying?
Yep.
That works well. They could buy the GLD. The GLD is paper.
That's an exchange-traded fund for the benefit of our listeners. ETF. You can buy it right on your computer.
Yes, it is. Now, another way of looking at it, you're an investment advisor, right? And I can tell you, the next play in gold goes like this. Gold can go down, the dollar can go up, right? The South African gold companies, Harmony, GFI, now I own both of them, Barry, okay? But those companies are paying dividends. They make money hand over fist. They're the ones that have millions of ounces of gold.
Yeah.
That is where you get the equity, number one. You get the acceleration up, number two, and you get a dividend payment.
How much is the dividend, Tom?
The dividend, right now, they're pushing out about 2%.
You buy that on the pink sheets?
No. These are Goldfields is a $11 billion company, and Harmony is a $55 billion company. Okay. I mean, they're huge.
Yeah, so you can buy them on the American exchanges.
Exactly.
Great.
They're both trading in the New York Stock Exchange.
All right. Well, Tom, I can't thank you enough. It's very hard to find people who have expertise in the field of gold. I do appreciate your time. Thank you.
We appreciate it, Barry. Thanks so much. Have a great one. Have a safe one.
Folks, that was Tom OBrien, the editor of the Gold Report and a frequent contributor to CNBC, trying to help us make sense of gold. When you see a drop like that, when you see a decline of 4 or 5% in one day, I got to tell you, when the CME came out, and that's the Chicago Mercantile Exchange, and they raised the margin requirement by 27%. The analyst in my office, I went down the hall, I said, hey, what does this mean? 27% increase in the margin requirement. He says, Barry, that's another 15% down in gold prices from where it closed yesterday, and that would bring us right to about the neighborhood that Tom was talking about, $1,500, $1,550 an ounce. So, I'm not saying to you to sell your gold, but this is some pretty good inside baseball educational information that you can use to manage your money and your portfolio.